Thank you for watching the SMB Forex Beginner's Guide series. My name is Mark Principato. The goal of this series is to share practical ideas and concepts that may help newer traders gain a better understanding of short-term Forex trading. In today's segment, I'm going to show how the Commodity Channel Index works. This oscillator offers traders a way to measure price momentum in any market. The Commodity Channel Index, also known as the CCI, was created by Donald Lambert in 1980. It measures a security's variation from the statistical mean. This means the CCI measures how far price moves away from its simple moving average. The standard setting for the moving average is 14 periods. The distance from the simple moving average is measured in standard deviations, which are represented by the 100 lines and 200 lines on the oscillator graph. The 0 line represents the simple moving average, in this case the 14 period. Commonly, the CCI is used to identify overbought and oversold levels. The CCI is overbought when it goes above the plus 100 and crosses back below. It is oversold when the CCI goes below the minus 100 and crosses back above. Keep in mind, the CCI, like other momentum oscillators, can be used in a multitude of ways. In this segment, I am only covering the conventional use. Let's take a look at an example using today's price action on a 15-minute chart. The first piece of information to note is the trend. Clearly, it's bullish. The trend is important to keep in mind when using this oscillator for trade guidance. As you can see within the context of this uptrend, when the CCI enters the oversold area, it highlights an attractive area for long opportunities. The key here is to wait for the oscillator to go below the minus 100 and then wait for some form of price action confirmation. This is where you can utilize a smaller time frame. When the CCI goes back above the minus 100, your buy signal is in effect. In this example, the price ran up 30 pips as the buy signal went into effect. Now it's important to realize you must be in your position before the buy signal is complete. This requires price action analysis, the kind we teach at SMB Forex. Also notice in this example how the CCI goes into the overbought area and moves lower while price is still going higher. This is a sign of lowering momentum. It's like somebody taking their foot off the gas pedal. Should you be shorting this? The answer depends on the type of trader you are. But if you are a conservative trader, then I would say no, don't short it. Why? The bigger picture trend is still up, and you're better off buying near the oversold areas. As far as shorting, you're better off looking at the opportunities in the overbought areas of a clearly bearish market. When incorporating the CCI into your approach, here are some points to remember. All oscillators are lagging indicators, but they serve a purpose. Use them as a guide and not as a trigger. The observations you make with the CCI, or any oscillator, must be made within the context of the trend and your specific style of trading. There are other ways to use a momentum oscillator like the CCI. Make sure to research your indicators further before incorporating them into your trading plan. That's all for now. I hope you enjoyed this segment. If you would like to know more about how SMB Forex can help you become a trading professional, contact me at mprincipato@smbcap.com. See you next time.